when starting to do the auto finance concept for the Uber drivers, I was like, on paper, this makes way more sense than renting a car. But when I put it out, like, I was expecting it just to be gangbusters. Like, I was begging drivers to, take auto loans with us. That is where I started to think or focus a lot more on, like, let me speak to the end user as opposed to think that, like, my MBA brain can, come up with some awesome service without really engaging with the end user.
Today, I talk with Kobina Ansah, who is a friend from high school. He's a 2-time fintech startup founder and now works for the AWS Accelerator team. Hi everyone, welcome to my channel. My name is Martina, and I'm on a mission to increase representation of underrepresented founders by sharing what I learned and by interviewing founders who share their journey and investors who share their advice. Welcome everyone. Today I talked to Kobina Ansah, which I'm very excited about. He's a 2-time founder of 2 fintech startups. The first one was ModernLend, which provides loans to international students and workers in the US who lack social security numbers, credit history, and cosigners using alternative data. And Kobina, this one especially really hit me personally because being an international student at the time, especially for my sister, was really hard for us to get financial aid. And student loans have been a challenge for me personally for a very long time. So I really admired that you tried to tackle that. Then COVERR is the second startup which provides financial services to gig workers, such as Uber drivers, to help stabilize the earnings volatility and to help out with small emergencies. And before that, Kobina worked at Wells Fargo and Ernst & Young. And his claim to fame, but really my claim to fame, is that we were in a math class together back in high school, which I will date us, was like 20 years ago at this point. Yeah, which is crazy. So Kobina, thank you so much and welcome.
Thank you so much for having me. It's so great to connect after these many, many years, and looking forward to chatting today.
Yeah, so Kobina, let's just dive right in. I'm curious, tell me a bit about you and your journey.
Sure. So I guess maybe to just talk about me at a high level, name is Kobina. I was born in Canada. My family's from Ghana, West Africa. And you and I grew up primarily in Ithaca, New York. And entrepreneurship has always been a part of, I would say, my family's history, with my grandfather creating one of the first timber trading companies in Ghana, or at least well recognized, and then my grandmother creating one of the first daycares in Ghana. And our claim to fame was the Queen of England actually happened to visit her there, and she was a very strong individual who raised over 6 kids by herself following the early passing of my grandfather. And it was kind of that grit and ingenuity that she passed on to her children. And so my mom created one of the first day spas in Ithaca, New York. And so I literally grew up in there and saw that. Always wanted to do something of my own at some point. As you said, after doing my undergrad in Ithaca, I went worked for Ernst & Young doing transaction services for a few years, which was interesting. And then I got to move on to the debt side, working with Wells Fargo, where I worked in specialty lending, underwriting over $1 billion of capital while I was there. But when I was there, my mandate was to work on deals that were $20 million or greater. And oftentimes the individuals who kind of met that criteria were pretty homogenous and not as diverse as people who were in my personal community. And many of the deals, maybe $1 million, $2 million, which would, at least for me, be, quite significant as an individual, didn't meet that threshold. And I thought maybe at some point, is there a way for me to use these skills I've learned through these 2 Fortune 500 institutions to serve high value yet underserved communities. But I didn't really have a framework of how to do that. And so I went to B school at Penn, focusing on entrepreneurship and finance. And that's where I started my first venture, ModernLend.
That is so cool. So let's talk about ModernLend a bit then. What inspired it? How did you get started? When did this idea really become an actual product that people could start using?
Sure. So at a high level, in terms of the actual idea, it usually starts with somebody close to you. And it happened to me, girlfriend at the time, who, like me, was Canadian, but unlike me, didn't have a U.S. green card. And so studying in the States, when trying to get even an apartment and not having U.S. credit history, unlike a normal U.S. citizen who might spread a month down or first month, last month, she was required to pay as much as 6 months in prepaid rent, which was pretty ridiculous to me. It's quite a significant cost to put up, and there were third-party companies that were willing to act as a guarantor for a high fee of 1 to 2 months of rent. And when I kind of stepped back and thought, wow, this is a crazy situation, how frequently is this happening? I realized that this was an experience that not only she as a student was experiencing, but more broadly, international citizens were experiencing across the states, and even my family has experienced. And so it kind of struck a personal chord, and that's where I started to think about how could we find alternative ways of determining credit worthiness to provide capital to this demographic, especially with many of these people going to clearly better themselves, right? It's like international students. Oftentimes these are people who are going to go to top tier companies at the end of the day, and be strong earners. Why don't they get access to proper credit? And I met my co-founder while I was at business school, and so he and I started to work on that. Instead of taking jobs at large companies, we started working on iterating on that company.
Like I said, it really struck a chord with me because we didn't have our green card yet when my sister started applying to college. And so, my dad worked at Cornell, my mom was a housewife, and it's like, well, he has a full-time job. We could have figured out how to get student loans, but we couldn't because of the lack of a social security number. I really resonate with that a lot.
Yeah, and something that I didn't really appreciate, and it's great that you bring that point about the student loans, is if you're an international student, you are not eligible for U.S. student loans, which provides a lot of cushioning for many students in the United States. As a result, students are required to prove that they have the financial worthiness to not only pay for the tuition, but also living expenses and other auxiliary costs to the academic institution for them to be able to get their student visa. And so as a result, that really screens out, people's financial backgrounds, and really only the highest earners, can really come to the States. Once again, kind of, signaling that, these people are probably of stronger financial backgrounds than the average U.S. student, and therefore deserve access to some sort of supporting some capital.
Yeah, totally. Yeah. So you met your co-founder in business school. The two of you got together. How did you kind of start validating this problem and start iterating on a solution?
Yeah. So one thing I'd say really quickly is that something that I didn't really appreciate at the time, and maybe we can talk about later, but is that business school, or even just academia in general, is a really interesting, unique time to find co-founders. Once you're out of school and people start to move on to different stages of life, whether you're getting married, whether you have children, whatnot, or you just have a full-time job, it's really hard for somebody to make that leap, that jump. Whereas when you're in business school, outside of your academic requirements, you have a decent amount of time to yourself, and you can start tinkering and iterating. And so my co-founder had previously worked at Goldman Sachs, also in finance, and I'm sure if I had asked him, hey, leave Goldman and join me to figure this hard problem out, it wouldn't have been as attractive as it was when we were just there together and said, hey, let's spend some time, see if there's there, so to speak, and then go from that. In terms of how we started tinkering with the idea, we first did a lot of surveying of international students on campus, and then we got into the on-campus incubator, where we started to try to build out our first version of the product. So initially, we were going to try to do something like the guarantor, a cheaper guarantor service for international students, given that was kind of the original pain point. Found it to be a bit challenging from a risk management standpoint. If somebody doesn't pay you, what do you do with that empty unit, things of that nature. Started thinking about providing actual student loans to international students, with possible sponsorship from alumni from their schools as kind of possible sponsors for kind of lower interest capital. Um, there was a lot of demand from the student side, not so much from the investor side, because there was concern if a student ends up going back to their home country, what type of recourse do you have? And so kind of with all of that and speaking with students, we found that they really wanted a roadmap to build initial credit history. And so that's where we started thinking about a credit card. And that's where we came up with ModernLend, which ended up being titled Credit Without Borders, a credit card that basically looked at alternative factors, such as the information that they had to provide to academic institutions to be able to go there, and their future potential income potential based off of kind of areas that they were studying, use that as a basis to provide capital that they could use to support student expenses, as well as, just their normal kind of student life. That's something that took quite a long time. Right now, something in fintech that's like really popular is called BaaS, banking as a service. It's really easy to team up with a bank kind of now for a particular price, whereas before that wasn't available. So we literally talked to hundreds of banks, went through diligence a bunch of times, and it took a really long time to find our ultimate bank partner, which was called City National Bank of New Jersey, who took a chance on us, and that was what we used to launch our product to many schools, I think over 200 schools across the United States.
Wow, that's really incredible. So not only were you kind of ideating on the problem using a lot of user research, but then once you kind of found that problem or like the real core that you wanted to solve for, you then had to find like partners. You met hundreds of them. That is a lot of work you and the co-founder put in.
Yeah. I mean, I think it depends on how you look at it. It is a lot of work to find all those partners, but then those are also potential large distribution partners, right? They're, instead of having like one single channel through which you can work through many academic institutions, this is a pain point that resonates with their student base. It's a value add. And so, it was exciting to, go from like one school to like next thing you know, you're hearing students from other schools are using it that you hadn't even, reached out to. And yeah, that was some of the highlights of that part of the journey.
That's really cool. So you had a co-founder, you met him in business school. How did you figure out that this was the person you wanted to start with? Kind of what brought you two together?
I would say that we learned a lot through our experience working together as first-time founders. We probably didn't do enough diligence in terms of each other, in terms of figuring out like what motivates us. Why do we want to do this? What are our personal goals, and how do we want to delineate the work that we do between each other? But in terms of like how we found each other, we were two guys who were both like, we're both finance. We both have international families. We're both attending this, entrepreneurship club. Do you want to think of something? I think initially, maybe he like pitched me like an idea. I pitched him an idea. Like we were just like kind of pitching each other ideas. We actually lived in the same apartment building when we were in business school. And then like one night I was just like, I think I got it. I think your skill set will align with mine. Here's like the financial model. And, we went off to the races. But in retrospect, I think that we probably should have done more personal discovery to better understand like, what it is that he wanted, out of this type of work or relationship, and what I wanted. That might have helped to lead us to like continue to work with each other for like an extended period of time. We launched the company together. We went through an accelerator together, but unfortunately after I think about 2+ years, we parted ways, and I wish him all the best. But we probably could have done a lot more together had we been a little bit more transparent in our areas of interest.
Yeah, that's really great to know. I think a lot of people say like finding a co-founder is like marriage, right? It's like a life partner potentially that you need to be able to get through the highs and the lows with, and working at a startup or founding a startup, there are probably a lot of lows that need to kind of get worked through. And so having someone that kind of is by your side that can lift you up and vice versa is definitely beneficial.
100%. And I would say the most disappointing thing is possibly having like traction or things going well on a business side. But I think I'm sure there's a statistic around this, but I think founder issues are like one of the most common reasons why ventures fail, right? You might have done the hardest part of identifying a market and finding, a really strong pain point, but for whatever reason, the founders don't work well together, and as a result, the venture can't persist, right?
So would you say that's like your takeaway for next time is like really doing like strong, even like personal and motivational due diligence on your partner?
Totally. And I think that's the reason why I didn't start off with a co-founder at Cover, because literally, as I said, we jumped into working together over like not even a beer. It was just, I went up to his unit and was like, hey man, this is an idea I have. Like, what do you think? And he's like, this is great. And then a day later, he's like, do you want to do this together? I'm just like, yeah, let's do this together. And, we just went to the races, as opposed to like, hey, this is my skill sets. This is what motivates me. This is my working style. What motivates you? Why do you want to do this? How should we, split things? Not to go too far down this, I guess, rabbit hole, but something that happened is when we started, we just called each other partners. Like, we were like 50-50. Like, we were just thinking kind of like a, real estate deal, just looking at like equity that way. When we went to an accelerator in New York, we started saying things like, well, who's the CEO and who's not? And unless you are maybe a Warby Parker, you are crushing it. Usually you can't, say that you're co-CEOs. Somebody needs to be the CEO, somebody needs to be COO, whatnot. And it was really hard for us to do that. And that was like the start of our challenges in terms of, I think I came up with the idea. He didn't feel comfortable not being called the CEO. And like all of a sudden, in the background, that created issues that took our attention away from building product and serving the needs of our target customers. To your point, yes, I'm much more thoughtful, or I think a lot more thoughtfully when thinking about founders, and when I'm mentoring, that's also telling companies that I deal with.
That's really, really helpful. I think also the questions you listed that you would be asking, I think a lot of people could take a lot away from that in terms of starting the conversation and fostering that relationship over time.
Again, because I think some of the most successful founders that I've seen from companies, like, they build other companies together, or they support each other. Like, this might not be the venture or the idea that works out, but if you have a great working relationship together and you've worked for a long time, I think, from an investor standpoint, there's a lot of credibility that comes through that as well, right? Like, we've gone through tough times. We've started in closed companies together, and we're still together. We are the team to get this thing done. We now know how to execute this with our experience, versus like, this is a random person I met on Angel List. Please cut us a check.
Yeah, definitely hits differently. Yeah. So you mentioned the incubator or accelerator that you were part of. I'm curious, like, what's the process of getting in, and then like, how did that impact your business? Like, what was the benefit or like impact of actually being part of that process?
Sure. So getting into an accelerator feels very much like college. You identify, your top list. You try to understand how do each program differ from one another and what value add you can get through it. And then you start applying, which is, sending in a documentation that kind of outlines what is your vision, who are the people on the team, what are the skill sets that you have, why do you think you are the team that's going to execute this, how can that accelerator help you kind of meet your near-term fundraising goals, and and then you start, if you're lucky, get interviewed. Ideally, you have somebody who's gone through that who can actually be a reference to you, kind of just like college, to give you a referral. And then it's usually a few rounds of interviews, and then the managing director typically chooses between 10 to 12 companies, unless you're YC, where you're selecting 400 companies, and they participate in a typically 10 to 12 week program where you get access to some initial capital for typically a pretty hefty equity price, but the benefit you get there is hands-on guidance from seasoned people who've literally seen hundreds of companies go from 0 to 1. You get mentorship. You get what I would say valuable is like frameworks to think through things and understand like business norms. Example, when my co-founder of that first business and I went to our first pitch competition, because we could come from finance, like more was more valuable in those environments. And so we had like our first pitch deck had 60 slides in it for a 5-minute pitch. Like that's not possible. It was a horrible pitch that we did. Going through an accelerator shows you like, hey, no, we need it to be crisp. We need it tight. We need to know what the big takeaways are. This is not to give every detail about what you're doing. It's to, get people interested in learning more about what you're doing. Things like that, are helpful. And then, hopefully you can leverage their network to raise your first round or possibly multiple rounds after that. So that is it. And I would say, one of the main things that I got out of that is also community. Typically, you're with 10 to 12 companies. Things have changed since COVID because we're not doing as many programs in person, but I was in person for that first one, and I'm still friends with many of those people to this day. Call them up if I have issues. They call me up if they have issues, and we support each other as we go through this general entrepreneurial journey. So I would say it's very valuable and certainly worth the equity you give up for it.
That's amazing. It sounds like also that you were very, very thoughtful about what you wanted and what you wanted to get out of it, and then were able to capitalize on that as you were going through the program.
You were very kind in saying that. I don't know if I necessarily did all of that, but I think that I kind of learned as I went along. But I think that, for those people who are thinking about going about it, if they really can like plan out, if they're fortunate and get to go, it's 10 to 12 weeks. It happens in a flash. I think the people who yielded the most out of the experience were those who came with a game plan. I want to fundraise. I want to close a partnership. I want to whatnot, because it's those 10 to 12 weeks that you have the most attention of those mentors and investors. After that, I'm sorry about that. After that, they are no longer focusing on you as much.
Okay, so that's really helpful then. After you kind of went through that accelerator, what was your steps afterwards? Did you continue, or were you going into a fundraising round? Like what happened then?
With the first accelerator, right after completing the accelerator, we actually had pitched BBVA, a Spanish-based bank, where their CEO actually, dude making millions of dollars, had the same exact issue of getting access to capital from his own bank because they had a U.S. subsidiary and they wouldn't give capital based on their underwriting criteria. And so it just resonated with them. And so we won this international competition, and that got a lot of buzz around us, and started looking towards building a pilot program with them. It was based on that interest that we were able to put together a small, I would say, like angel round. Given that the names are constantly changing, angel, pre-seed, whatnot, but angel round probably around close to like $500,000 basically, with the goal of basically just getting us off the ground and helping us put our first card into market. It was a lot less money than we probably should have gone after, and again, being a first time entrepreneur, that was kind of something that we would have benefited from had we had a bigger network to engage with, if that makes sense.
Yeah.
But still was able to leverage the competition and the accelerator to do that. Yeah.
So unfortunately, ModernLend is no longer around. Can you tell us kind of what led to your decision to wrap that up?
One of the I guess big lessons that we learned from that experience was that we needed to diligence our partners as much as they diligenced us. So I won't speak ill of BBVA because they were great to us, and we did other things with them down the road. But at least the team that we were working with, after winning the competition, we spent, I don't know, probably 6-7 months in diligence with them, all for naught. With that team being disbanded overnight one day. And, for a large company, maybe it's not a big deal. For a startup who's burning dollars every single day, it was huge for us. And so we desperately reached out to other banks to find a partner to actually launch our credit card, because you need to be an issuer typically a bank, to be able to issue credit cards. We were able to find this small bank in New Jersey called City National Bank. They to kind of sponsor us. And they did all this diligence on us, but we did not do diligence on them. And so we got our product out to many campuses across the country. And after doing our pilot, the CEO was really impressed and made a big proclamation as to how much he wanted to support our company with a certain amount of resources in the millions. And then a few weeks later, we found out that bank's balance sheet was in total disarray, and they were being closed. And so they closed, and so did we. So it was a pretty traumatic experience, to be honest, because based on what the CEO had kind of promised to us, based on the performance of our portfolio, we had started fundraising for our next round. We had started doing marketing for our on-campus launches and things of that nature, and for it to kind of go up in smoke, in a matter of days with really no recourse on our part, was quite difficult. And so, we had to go through the process of telling our investors, telling our clients, telling the schools that we were working with that we could no longer offer the service. And it again wasn't a time where there was such a thing as BAS, where you could just easily find another partner pretty quickly. It literally took months for us to find a single bank to work with, but very strong learning experience.
I'm so sorry. I can't imagine what that must have been like.
Got to charge it to the game. What I can say is that I was thankful for the team that I had. At the time, they worked with me until the final day, and I think the reason why they did that is, one, we had a strong value prop. We were adding value. It wasn't just a random widget we were building. We were helping people, and got a lot of people who reached out to let us know that. The other is that I was transparent through the whole process. So I didn't wake up one day and some of these CEOs that we read about in the papers just get people on a Zoom call and say everybody's fired. That wasn't the thing. I let them know during the whole process, kind of, this is where we are. These are the other options that we have. If you need to, for your own financial security, need to transition, I'm here to support you, and let me know how I can do that. It's these things that have allowed me to maintain relationships far past the completion of ModernLend.
So even as a first-time co-founder and CEO, you're leading by example for people who've been in the game decades and still can't get kind of culture and human decency right.
Well, I think that you may appreciate that as somebody who's of international background. It was more me leveraging the communal environment that my parents created for me. It's just I guess, as you say, personal decency, right? Human decency. And life is a long period, relatively long, and you never know when you might re-engage with these people, or the next idea might pop up. Why burn a bridge?
So between ModernLend and COVERR, you then spend a whole year testing and ideating on lots of different things. Tell me about that time. What were you looking for? How did you know that this idea, whatever it was the one you wanted to focus on next? And how did you know after ModernLend that you wanted to start something again?
I would say it's two-part. One is that I feel like I didn't get a real fair shot with ModernLend, given that this bank just kind of died overnight, and it was, I guess, a poor choice of partner maybe on my part. So I wanted to, I don't know, I still had it in me. And really, when I sent letters to all of my investors, notifying them of kind of what transpired and the unfortunate fact that we had to, wind down our company, one of my investors was just like, "Hey, that really sucks, but I believe in you. Let's try again. What else is there? What else can you do?" He happened to be one of the largest auto finance providers for Uber drivers in Mexico City, and said "Hey, is this something that you could do in the States?" And I said, I have no clue, honestly, but I can try. I can diligence. And so that's where I kind of started just kind of iterating and testing and seeing, is there demand for auto loans? Is there demand for general auto loans? Is there one maybe for international citizens? Is there one for Uber drivers? And what I found relatively quickly was that in New York City happens to be one of the unique markets in the U.S. where drivers have to actually get a specialized license plate, and specialized insurance, and specialized driver's license to be able to drive as an Uber driver, which is quite expensive. And as a result, some people can't afford to actually buy a car, and so they rent a car for as much as $350 to $500 a week for a car that probably has an MSRP of roughly $20,000 that they'll never own. I thought that was pretty crazy. So I thought maybe we could provide auto finance for these drivers. And so I went to the office where Uber signed up Uber drivers and literally started flyering people and talking to drivers and things like that. And after finding it challenging to get our first couple of drivers to actually get an auto loan, what I found is that even though we were paying for the car, the insurance, the registration, all of that, only required a $500 down payment. Oftentimes, these individuals didn't have the $500 or would need several weeks to put that together. And so it was at that point that I realized maybe the bigger pain point here is liquidity rather than just a straight up auto loan that provides greater flexibility for them. And so I took $1,000 out of my pocket, gave 10 drivers $1,000 each. Not $1,000, sorry, $100 each, and tried to see if over the next couple of weeks if they would pay me back. They did, based off of their earnings, and that was kind of the genesis of COVERR. So that first year was just talking to drivers, riding with drivers, diligencing different things. We were looking at possibly insurance premium financing, talking to insurance provider, just all of that, but just looking for something that really, resonated, something where I wasn't begging users to use our service. And it seemed like this was a real blank spot. And also with my background in traditional finance, knowing that, if they were going to be conservative for international students who were demonstrating that their parents had the financial resources to do what was necessary, for somebody who has literally income or revenue that vary on a day-to-day basis, that's going to be a very high-risk pool that banks are probably not going to be interested in working with.
I really admire your grit and your kind of hands-on or getting your hands dirty approach to research and problem solving. I think that's really admirable. I recently talked to a CEO who was building something for the underserved market, and I was like, oh, have you spent any time talking to the consumer, the potential end consumer yet? He's like, no, not yet. We'll get there once we have the model in place. And I was just like, whoa, I don't know how you're going to build this if you haven't talked to the user.
It's funny that you say that. And I won't give myself particular credit there. I would say that I kind of went there after learning from my own mistakes. So when starting to do that auto finance concept for the Uber drivers, on paper, I'm thinking of cost of capital. I'm thinking of, income, increased, personal cash flows that come as a result of, lower cost of capital, things of this nature. I was on paper, this makes way more sense than renting a car at such an extremely high rate for, something that has such a low value and is depreciating. But when I got to the driver, when I put it out, I was expecting it just to be gangbusters. I was begging drivers to, take auto loans with us. And then when I finally spoke to them, I found out what their perspective was. And they were like, I work in the gig economy because I'm here for gig. I don't want to be locked in for something for 2 to 3 years. I am happy to pay a premium to have flexibility. These are my real challenges. And so that is where I started to focus a lot more on let me speak to the end user, as opposed to think that my MBA brain can, come up with some awesome service without really engaging with the, the end user. So that's very funny that you said that, because I hear that time and time again, and sometimes with really well-funded companies that don't seem to be very well in tune with what their end user really wants. It makes sense on paper. It's well intentioned, but it's not what the end user actually cares about.
Yeah, totally. So what was one of the lessons that you applied for ModernLend then? Was that something where you were like, oh, this is what I learned in ModernLend and I immediately applied it? Was that the user research part, or was that something else?
I mean, it was a lot of things. It was user research. It was building a product that was not reliant on a single banking entity, so that if for whatever reason that were to pull out, the business would be gone. It was not jumping immediately into bed with a random founder just because, like, somebody liked the idea, and we had one meal together. I'm being a bit facetious with the last thing, but like we didn't do material diligence with each other. I took all those lessons. I mean, fundraising. As a novice, sometimes when somebody's like, "Oh, I'm really interested," like whether it's from a fundraising side, like keep me on your bulletin list, like, or like I want to, you're a bit early now, but I want to lead your next round. Like these are like all things that as a first time founder, I was like, oh my god, this really large venture fund wants to lead our next round. This is amazing. It's like, no, that is a like that is a push off. That is a if everybody else wants to get in the round, we will also want to get in your round. But until then, like, leave us alone. But again, these are things that you just don't know as like a first time, founder. So I was a lot more discerning, kind of on all of those features or all of those areas when thinking about building the next business. Certainly didn't execute it perfectly. There's still quite a lot of other things that I can refine, and I certainly will continue to refine as I go on my personal entrepreneurial journey. But as you said, you just like take these lessons with you and try to apply them the best you can.
Oh man, I can't imagine what it must have been like to get that email and be like, oh my god, they're gonna lead the next round. Because I think like I would have taken that as it's a yes. And then
well, especially when it's like I don't want to drop the name of this particular fund, but like especially when it's a fund that, like, at least in the venture capital world, is very well known. I remember the MDs of the accelerator program I was a part of. It's like, why are you even taking that meeting? Why are you? They're like, well, they said they wanted to talk to us and this and that, and it's really they just wanted insights as to like market trends. It had nothing to do with like doing a deal. Like if you're raising a $500,000 round, like why are you talking to a fund that's normal check is like $10 million or greater, and they're typically like Series A, Series B? Like, stop it. Wake
That's
up.
good.
And so,
yeah.
But again, you wouldn't know that if you're a first-time, founder. You're trying to talk to any investor,
So something else that I noticed about you all is that you were part of Techstars New York, which is like such a prestigious accelerator to be part of. So again, like you kind of went the route of like incubator/accelerator the second time around as well. Can you tell me about like what led to that decision and like what was the impact of that?
Yeah. So COVERR, unfortunately, was like launched 3 months prior to COVID or Corona like happening, and a few months later the city went in lockdown and all of that type of stuff. But we had the fortunate opportunity to go through Techstars New York. When I say it's a little unfortunate, is there was so much value that you get from being in person, and being fully remote, it was a very different experience. Still valuable, but just very different. I think the reason why I decided to still go through an accelerator, and I think if I were to do another venture, I would probably still consider that, is that you're able to just leverage those networks. My family, my dad's a geneticist, my mom owns a day spa. Neither of them are connected to the VC world, right? It's a lot about connections. It's a lot about knowing a lot of high net worth people to get you off the ground, and that is something that I was able to leverage, and I guess also credibility, right? I think they accept like 1% of the, or at least New York does, like 1% of the applicants that apply. So for a VC who's looking to de-risk, that's a nice, de-risking measure that you're able to benefit from. Yeah, I mean, it was very helpful. Great MD. She's very well known. She has her own fund now. Yeah, I mean, it was a great experience. Just again, just different because it was fully remote, so I didn't get the full community value that I did in the first one.
Okay, yeah, that's fair. Pandemic definitely put a wrench in a lot of things for a lot of people.
Pandemic.
Yeah, totally.
To say the least, definitely made people have to be a lot more uh, creative, right? Like, when your back is against the wall, either you give up or you get creative. And I think for entrepreneurs, we oftentimes get creative. And honestly, I think there are stats that talk about how a lot of great companies come out of pandemic, or not pandemics, but like financial downturns, just because they are being viewed by the VCs in a much more conservative manner. They have to be much more thoughtful about their runway spend and things of that nature. So I guess you could say it's a blessing and a curse.
Okay, losing complete track of time. We got 8 minutes left.
Boom, let's get it in.
Yeah, okay. So just briefly, like, tell me what's next for you. What's next for COVERR?
Yeah, so well, like ModernLend, we got to a point where there was a bit of a challenge. I mean, right now it's November 2022. The last 6 months have been very difficult from a financial standpoint, and basically in the summer we just weren't seeing the level of traction that we needed on a national basis. What we found is that we just couldn't identify a way to scalably meet the financing needs of gig economy workers who our average advance size was about $400 to $500, and there was a lot of diligence and background and checking and this, that, the other that we need to do. There was also materially more risk in the secondary and tertiary markets that we entered. So with given that, in consideration and looking at where the financial markets looked like this summer, as it looked, like public markets were contracting. You would think that then investors are also going to be contracting, and so decided to wind that venture down. So I'm actually in the process of winding that venture down, and I more recently joined AWS's startup team, which is a team comprised of former founders and investors who are all just passionate about serving other awesome entrepreneurs and helping them avoid the mistakes that we did, and leveraging the AWS brand to help them accelerate their growth. So that is where I am in the near term, and we'll see what the future holds for me. And I never thought I'll be fortunate enough to go to the academic institutions I went to, or necessarily work for Ernst & Young and Wells, and didn't know I'd come up with 2 fintech companies. So maybe the third one will be the charm, and I'll see you at ringing the bell on Wall Street, maybe.
Well, Kobina, I never doubted that you were going to be successful. I feel like in high school, I was just like, this dude's going to be someone. So in my book, you are someone, and I have no doubt that the third venture is going to be the one.
Oh, well, I greatly appreciate it. I'm so happy to be a part of your network. Really love what you're doing with this initiative, and hope that some of our discussion was helpful to someone. But
Yeah,
certainly personally happy to be of help to anybody in your network or viewer that is interested about the journey and things that can be beneficial to them.
Yeah, I appreciate that. And don't forget to throw out your disclaimer.
Oh, right. All of the things that I said today are personal opinions and views, and they are not reflective of any publicly traded companies that I may or may not work with.
One thing I would love to have on record, just kind of like, where can people find you? How can people connect with you?
So I'm not super hip and like hit me on, it's the best way to probably get in touch with me is on LinkedIn, honestly, which is just Kobina, Kobina, last name Ansah, Ansah. I went to Cornell, I went to UPenn, so I guess those are the information that probably will help them find me.
Yeah, perfect. I will link that in the description. People will find you. And yeah, thanks so much for doing this. This was so cool.
This is a lot of fun. Thank you for having me. This is a great initiative that you had. Love what you're working on. I definitely look forward to seeing more of your content.
Unfortunately, we ran out of time. There's so much that we could have kept talking about. We didn't even get to Never Again, but that's okay. I have full confidence that Kobina is going to start his own company again at some point, and then I can't wait to have him back, and we'll dive into even more things then. Next week, I'll be sharing the top 3 tips from angel investors on how to get started. Join me and subscribe, like, and share with a friend.